we have the hourly price chart for GameStop Corporation, stock ticker GME. So currently what we're going to do here is we're going to drill in a bit here on the hourly time frame so that we can take a look at this current trend wave lower. At the moment, this is the most dominant trending move. And this is really what's governing price action here. I do want to take a broader look and we'll pull out to the longer term charts here because I think that's going to be important as well for this stock, given the current situation and the fact that the stock is falling so sharply. But first, I want to try to take a look at what exactly is going on here so that we can try to figure out why this trend has developed the way that it has and whether or not this trend is likely to continue in the downside direction. So currently what we're doing here is we're looking at the prior price highs, which came in during the July 17 trading session. These highs posted at 29.79. This is a level that I've been pointing to in prior videos because it was my belief that it was much more likely short sellers would start to enter the market right around this area. This did turn out to be the case. So as we can see here, the selling pressure that did unfold was quite substantial and it was quite forceful. We really didn't see many periods of sideways consolidation here. This was really almost completely lower until we did reach these trend lows here, which came in at 1873 is the current price low. As you can see here, there's even some gapping activity here to the downside, even with all of these price moves lower. So this is significant because it's almost as if that selling pressure wasn't enough. We also were ready to start seeing gapping price moves lower as well. After falling to this 1873 level, we did see a bit of a bounce. But as we can see here, in comparison to this broader trend wave, this bounce has been relatively muted and minimal. Currently, what we're really seeing here is a bit of a failure or at least some resistance that's occurring at this 23.6% Fibonacci retracement, which currently comes in at roughly 2140. At the same time, what we're seeing is some sideways consolidation right around the 20-hour exponential moving average. So this is significant as well because now we're seeing a confluence of technical indicators which are forming in the same area. In addition to that, you also have the downward sloping 50-period exponential moving average, which is this orange line here. So if this continues to move lower, and it will because prices are currently trading below that level, this is another area that could start to generate resistance in this exact same area. So this is a problem here because if we do see a failure, what we're really looking at is another retest of these 1873 lows. The next question that traders need to ask themselves is whether or not that level is likely to hold. At this point, it is relatively clear that there's a lot of confidence that's starting to leave the market. Now that we've given up this $20 level, which was sort of this well-publicized, highly watched price level, Roaring Kitty was really given the focus here with this $20 level. But now that this level has broken, the real question that traders need to be asking themselves is what level of confidence still exists in the market? How many diamond hands are still out there? How many people are still interested in holding on to this stock, even though we're seeing this steady decline? If the answer to that question is that there's not much positive activity here, if there's not much confidence, then the real question next is what is the next price level to the downside? If we move out to the daily chart here, it becomes a bit difficult to visualize given the fact that so much of this price action is starting to flatten out right in line with the exponential moving averages. This can make it difficult to identify important support and resistance levels, but in order to find the next level to the downside, where we really have to go is all the way back to the May 24 trading session, 2024, which came in at 1770. As things currently stand, this is roughly $3 below current market prices, and we have regained the $20 handle, to be sure. I don't want to ignore that point. I mean, it is fairly significant that we have managed to break back above that level, but the real question here is how big the bounce will be. Anybody that's familiar with technical analysis might have heard the term dead cat bounce, and if we do see a failure at that prior 23.6% Fibonacci retracement level that I mentioned earlier, this could start to fall into that category. Specifically, this level here is the level that I'm referring to. As we can see here, this is sort of the red zone. This is the first Fibonacci zone that would be required in order for the stock to start to make a more full retracement. If we fail at the 23.6% Fibonacci retracement, then that means we won't even be able to reach the 38.2% Fibonacci retracement, which is much more important. In terms of the Fibonacci analysis, this is a much more important Fibonacci number. As we can see here, this level currently comes in just above the $23 mark. So this does mean that we would need to recover roughly $2.50 more in order to at least test this level. If this does occur, we can see that this is also another consolidation zone that has been marked by historical resistance levels in the past. If we go back to the July 31st trading session, we can see that the price high here came in at 23.45, which is roughly 40 cents away from this important Fibonacci retracement level. At this point, the main question is whether or not this move here is in fact a dead cat bounce. If we start to see prices roll over here, that would be a very ominous signal. Instead, the positive viewpoint here would be if we were to break above this 23% fib level and then also break above the 38.2% Fibonacci retracement, this would essentially mean that we have broken above the 20-hour, 50-hour, and 100-hour exponential moving averages, as well as the historical resistance zone that was found during the final parts of the July trading period. Essentially, this is the type of price movement that is going to need to be seen in order for us to actually get a retest of this $30 level. Then ultimately, if we do not see a retest of this $30 level, in my view, what is going to be happening here is that the short selling side of the market is going to grow in confidence in terms of their ability to initiate positions at lower and lower levels. If all of that occurs, then it makes it much more likely that we'll start to see support zones also form at lower and lower levels. For all of these reasons, I am viewing this 2140 level as a critically important price zone near term. In my view, if we do not see a clear break above this level, it's going to become incredibly unlikely that we do see a retest of this $30 mark anytime soon. This could then lead to further price declines that do result in lower lows for the stock. However, if this does not happen, if we do see a break here to the top side, then this $30 level becomes much more attainable going forward. So here's the current market analysis for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.